So I'm Brian Duke. I lead data science for Prism Data, we're a financial technology company that focuses on translating somebody's bank account data into a credit score or a fraud score. And I worked in fraud for a long time, most of my career, last 15, 20 years. I think the first thing that comes to mind that's the most interesting is more a not fraud story. So I've worked for a few vendors who do like transactional fraud monitoring, and you get a lot of very strange purchases. So I was working with a very large bank who we noticed in their data they had a lot of fraud transaction episodes that were a single transaction long. They were all at adult entertainment merchant categories. And we asked them, is this really fraud or is there something else going on? And they just said, we really don't ask too many questions. We're not in the business of breaking up marriages, was their message to me.
All right. What about you? Any interesting factoids on fraud cases that you've...
Well, today we're seeing different types of fraud because the controls now are catching up with the bad guys. They're having to pivot to other things. Right. And they're looking back in the rearview mirror time at old fraud that worked even before the internet. Yeah. And so today we're seeing some pickup around insider fraud where bank employees are working with outsiders to do like chargebacks, things like that. And those things are really hard to detect. And so we're seeing needs in that area to help our clients, and that's what we do at Quint. We provide back office experts that work fraud claims, that really keep up with what the current problems are, because we're hands-on every day doing those, so we see them, we don't guess, and then we share that with our clients. But the key today is in the industry, just like we're seeing with insider threats, that's got to be communicated to the industry, and right now there's not good platforms to do this, because one, they don't want to tip them off, but again, that's why I come to these events, to learn from other people and also communicate with them things that we're learning.
Now, I know the topic is, can technology eliminate fraud, but what is one piece of technology you guys are sort of scared of, or your clients are scared of, that's accelerating fraud, first party, second party, third party fraud? Would you want to share some experience on that?
Well, I thought we were just going to answer the question and say no and go home. So
that's right.
I think the thing that's really kind of making people take a second look is a lot of these new alternative data sources. So when we add a lot of, our company's in the business of adding on cash flow underwriting to, loan approvals and decisioning. But a lot of people have questions about, okay, well, you're adding on this new data. Is it yet another place that can be perpetrated? Like a credit bureau, we all know that it's very good data. It's very useful in decisioning, but it can be perpetrated by frauds. Perpetrated is not the right word, but used by fraudsters in an illicit manner. Like someone can steal my identity, my good payment history, and use it to get a loan for them. So how do we, I think a lot of the questions we get is, how do we utilize some of these new data sources to make better decisions and continue to protect against fraud as we add more and more data onto a decision-making process when granting a loan?
Right. Jim, what about impersonating somebody else, biometrics and things like that, voice, face? We've seen a lot of these new advents of AI technology that could mimic my voice, my face. Nobody wants to do that, but anyways. Do you see any of the new technology out there that's accelerating fraud cases or helping the fraudsters?
Well, I guess what's helping fraudsters are, and I'm seeing this in a lot of institutions right now. I got one I'll speak about, won't give you their name, but it's an organization in Florida, and they're rolling out 3 new analytical tools, such as SAS, Early Warning, and Verifin. And I asked him, I says, okay, you're doing that in the next 3 months. He said, yeah. And I said, well, what's your current workloads with what you're already doing?
Right.
He said, why you ask? I says, well, when you turn these tools on, alarms are going to start ringing, and you got to have someone that can respond to these.
Right.
And he went, I hadn't thought about that. And I said, well, that's where we can come in and help you with that, but you need a better business plan, is my point, because the fraudsters know, and we see this, for example, with chargebacks. And again, what's going on with chargebacks is they know that the bank's going to write everything off over $200.
Right. So drive a truck through that, right?
And what we do, we go in there and challenge everything starting at 25, and then when 30 days later, an institution looks at their balance sheet and went, wow. We said, yeah, because when you challenge fraud claims starting at $50, you're sending a message to the account holders that friendly fraud's not going to tolerate it, we're going to challenge it. And so they know how things work. I was even talking to a guy yesterday around ACH fraud, and he says what's going on now is people will do an ACH payment.
Yep.
An hour later, call back in and try to shut it down, and they'll do it.
Right.
But then the audit processes will take 3 days.
Right.
In the meantime,
Too
they're
late.
doing multiple of these, and then they clean it out. It's kind of like check kiting.
Yeah, kiting in real time, exactly.
Yeah.
When I worked at JP Morgan Chase, we had a $80 million allowed budget for check fraud, and that was acceptable for the bank. 80 million a quarter. So that was, if we stay below that, we're okay.
Yeah.
Or on that, we're okay. It's almost like a joke there. But Brian, back to you. What are some of the other things that you're seeing today that sort of doesn't help you sleep at night? Something that's going to pop up in the next quarter or so that's going to open the whole industry up?
You know, I think there was quite a bit of, somebody earlier in a track that I attended was talking about like the payday protection program loans and things like that. I think there's a lot of fictitious identities that were created around the time of that. You know, there was, I was working for a credit bureau a few years ago, and we were working on some fraud problems. And there was a remarkable number of applications for COVID stimulus from fictitious identities, either completely made up, like it was on the news that, you know, various state senators in California apparently applied for, you know, federal stimulus, even though they had jobs clearly, but it was traced to prisoners in jails and prisons and stuff like that. So I think a lot of the use of some of those funds, making sure they are real live people, they have activity in their accounts, they're using these accounts like normal people do, because of some of that prevalence of creation of all these identities, at some point the fraudsters are going to want to monetize those.
Right.
They have been to an extent, but I think they're going to continue those types of behaviors and patterns over time.
Right, Jim. What about how could you merge common sense and technology together? Can you tell us a story that, you know, again, lots of technology being implemented, but what are you going to do with it, right?
Right.
Yeah.
Well, the way I look at fraud today is everybody's been hitting the easy button, which is technology. I've a number of clients this year we've talked to that went out and bought all these tools. Like I was explaining with this guy, they didn't have a plan to, you know, leverage them and prepare for the end results. And so that's where we're back at looking at. We focus first on people, process,
right.
then the technology. And those two there, if you can't get those working, why don't you go buy the technology? And again, that's where we come in. We help clients deal with that. We're not strategic. We're more tactical. And that's what they're looking for is people that are going to be there with them every day, helping them with this. And that's the issue that we're seeing with the banks and credit unions. They're really running into issues trying to hire people. That if, you know, they got the certifications, but do they really have the skills to take it to the next level?
Right.
Can I add something
Yes,
on there
please.
too? So I think to Jim's point, there's quite a bit of you need people, you need technology, you need data. But I think there's another process is really missing. So when you talk about fraud, I think a lot of people, especially in fintechs, misunderstand the different types of fraud. Like a consumer applies and you find out that you take a fraud loss. Well, it's really important to identify what type of fraud that was. Was it a fictitiously created identity? Was it me stealing and pretending I'm Jim? Or was it, I just really don't feel like paying you? Or there's something that's not on my credit report yet that I know about myself, like I've lost my job, but it's not available on my credit report yet to know that I'm not going to pay you back. And being able to discern what type of fraud it is, like if I suspect a fraud has occurred and all I do is verify somebody's, you know, by calling them, all the first party people are going to pass.
Right.
The third party people might not, but you might also be talking to the fraudster. So having the right process in place with those people and technology and data is almost more important than any of the technology you implement in the first place.
Right. Jim, I'm sure you can tell us a good social engineering case. You know, you want to give us a couple of examples of how, you know, these, you know, smart fraudsters kind of, you know, work around the system, and it doesn't matter how much technology we put in place, there's always that human element that could be gamed, if you will.
Right. Well, on that note, I've had a lot of people say, you know, where do these guys come up with these skills to do this stuff? And I'm going, well, they actually work in your bank. And they go, what do you mean? I says, well, a lot of, based on my research, looking at fraud reports, in a lot of cases, there's a vulnerability they found in bank software in their day job, stumbled across it, and then they go home at night and they need to make a alimony payment that they ain't got the money for, and they go on the internet and they'll sell that 0 day. That's because 0 days, frauds, vulnerabilities in software you're not aware of. And so I've seen some of that, because I've read some cases where now they're starting to realize that that's where they find this stuff out. So you got to vet your people out and what they're doing and understand that you're putting them in charge of controls. And you saw what happened with the Ukrainian information getting leaked by a low-level guy. Right. So again, in your organizations, when you do discover a vulnerability, do not share that with people. You got to have processes in place. And I used to do a lot of cybersecurity consulting, and that's what we would teach the banks is you've got to set a process up that when a problem's identified, there's a chain of order you got to take that to, and you got to control those conversations, because the last thing you want to do is get out to the media before you can deal with it. So, but on identity theft fraud, like synthetic fraud right now, there's 12 steps published on the internet on how you do it.
Wow.
And I've shared that with a lot of my clients. Once a year I send it out and say, hey, because a lot of people coming into the banking industry are learning. They're young, they're having to make the same mistakes as their predecessors. And so what I try to do is send them information so they can understand. They understand what synthetic fraud is, but they don't know how they do it.
Never seen it.
Understand how they do it. Now they can start figuring out, how do I challenge that and go through those processes. And so that's, again, it's back to education in the industry level. Again, and right now we're lacking in that. Because there's a lot of people here at this meeting can probably give you a lot of good advice.
Haven't lost $1 in their life, and got to experience that. So Jim, speaking of cybersecurity, we've seen the use of cyber data leaks and compromises and things like that, and God knows our browsers are telling us, hey, your password has been shared amongst the chiefs. Can we discern from transactional data, bank data, to see, hey, there could be a possible account takeover happening here on some of these bank accounts? Brian, you want to?
Yeah, we work on that specifically at Prism. So we take people's transactional data and then try to assess risk with it. We have a score specifically suited for first-party fraud. So I'm not intending to pay.
Got it.
But just the action of looking at some of that data and prompting a user to enter their username and password, and then looking for some minimum thresholds of activity. When we talked about synthetic identity, if we see certain types of activity in somebody getting a paycheck regularly, somebody making regular purchases, well, it's an awful lot of work for a fraudster to create that on a grand scale, at scale at least, and monetize all of those identities. So by asking for some of that transactional data, we can minimize the risk of synthetic identity. Same thing with ID theft. Like the identities that I can go buy on the dark web, if I have their username and password, I probably don't have their name, address, social, et cetera. Or if I have their name, address, social, I don't have their username and password. So the act of looking at some of these other data sources, like transactional data, can really help us to solve some of those types of fraud problems. And then first-party fraud, it's very apparent. Like, I know when you lose your job. I know that you have no more income. So it's very easy for us to solve some of those problems by looking at some of these alternative data sources.
Jim, any tidbits on, anything else we could do for the audience other than the regular multi-factor authentication and the 12 steps? Right. Any nuggets you can share with the team here?
Well, I think what I'm looking at today is we're needing more data sources to do this vetting, and we got to respect GDPR and prepare for that here in the States. And so it's going to make it harder. And so, but again, I think biometrics, in my opinion, more banks now are starting to wise up that it's not expensive to implement them. It's going to eliminate a lot of fraud, a lot of guesswork, right? And again, we all know that everybody's been able to spoof a lot of biometrics. But like I tell people, it's way better than a password.
Right, okay.
And so that's where people have got to understand that you're going to have to move forward with this somewhere down the road.
Right.
And a number of organizations that I've talked to in the past wouldn't do it. In the last 6 months, they said, yeah, we're going to move down that road.
Right. And we're talking about facial scans and rotate your neck in front of camera, take a picture of ID and do some comparison. things like that?
They do a lot of that with like KYC. They take your driver's license, okay? But I think that's going to have to go to another level now that we
Right.
know you can fake anything.
Right.
So it can require back more data sources to vet these people out. And the bigger institutions do. They've used other sources to see who you are before they open an account with you. The
Right.
smaller organizations don't have those skills or the money to do that. And so I think that's another area of change is you got to look at your vetting process because, like I said, they know your processes and they're going to know how they're going to work around them.
Yep.
And so the more data sources that you have to bounce against it, and also too, I've seen a number of chief marketing officers in banks said, yeah, we want to be part of that because we want to see where else they've got money.
Right.
And, there's products out there like MX and different ones that collect that, and that's what they want to see. And that also, too, helps them validate they are who they say they are. Because if they don't have any money anywhere else, well, a good chance it could be a fraudster. But they see they got accounts open at 4 or 5, and you can vet those.
That's right. Then
So-
positively identify yourself, right, Brian?
Yeah, I mean, I was going to add on like your concept of cybersecurity and things. We've been telling consumers for the past 20 years, don't share your username and password with anyone. And yet, this track is sponsored by Plaid, so we have to change the paradigm a little bit. Like the whole concept of Plaid is you have to log in with a username and password. So I think if we're looking at this and having the same conversation 5 years from now, we have to be looking at not just asking the same consumers to enter their username and password, but we have to look at all of that identity data, all of the other types of signals that we get to combine and form an opinion of is this person who they say they are.
Awesome. Brian, Jim, it's been a pleasure. I'm sure audience have a lot of questions for you guys, so make yourself available, if you will, in the back of the room. Thank you so much. Thank you.
Thank you.